Hi guys, today we are going to see Income Tax Inspector Exam 2023 Part 1. Before going into the video, kindly like, comment, share and subscribe for future videos. Question number 1. Which of the following are correct statements as per section 12 of Black Money and Imposition of Act 2015? So what is Black Money and Imposition of Act? Black Money Act was enabled by the Indian government to address the issue of black money or undisclosed foreign income and assets. So let's see the answers. A. A tax authority may amend any order passed by it under this act so as to rectify any mistake apparent from the record, which is true. B. No amendment under this section shall be made after a period of 6 months from the end of the financial year in which the order sought to be amended was passed. Actually, after 4 years is the correct answer. So B would be false. C. The tax authority shall not make any amendment which has the effect of enhancing the undisclosed foreign income and asset unless the authority concerned has given to the assessee an opportunity of being heard, which is true. The assessee has to be given an opportunity to being heard. D. No amendment under this section shall be made after a period of 4 years from the end of the financial year in which the order sought to be amended was passed, which is true. So the answer would be A, C, D are correct. So option C is correct. Question number 2. Any amount payable in notice of demand under the Black Money Act shall be paid within a period of 30 days from the service of notice of demand. So the answer would be C, 30 days. Question number 3. Any tax authority below the rank of commissioner may impound books of accounts, documents under the Black Money and Imposition of Act 2015 and retain in his custody any such books or documents for a period of dash without obtaining the approval of the principal CC, CC or principal CIT. So, an officer can retain the books of an assessee only for a period of 30 days. More than 30 days, he has to get prior approval from principal CC or principal CIT. So, the answer would be B, 30 days. Question number 4. Under the Black Money Act, an appeal shall be filed by assessee before the appellate tribunal within a period of, so the answer would be B, 60 days from the date on which the order sought to be appealed against is communicated to the assessee. Question number 5. As per section 23 of the Black Money and Imposition of Tax Act, the principal commissioner or the commissioner may pass the revision order if the order sought to be revised is erroneous and prejudicial to the interest of the revenue. No order under this section shall be passed. So this comes under section 23(3) of the Act. So no order under this section shall be passed after the expiry of a period of 2 years from the end of the financial year in which the order sought to be revised was passed. So the answer would be C. Question number 6. Under the Benami Transaction Prohibition Amendment Act 2016, which of the following is true regarding definition of a person? So let's go through each statement. The definition is identical as the definition of person given in section 231 of the Income Tax Act 1961. This statement is false. While there are similarities, the definitions are not identical. The definition is inclusive. This statement is true. The definition in the Benami Transactions Amendment Act 2016 begins with person includes, which makes it an inclusive definition. The definition has no proviso or explanation. This statement is true. The definition in the Benami Act does not contain any provisos or explanations. So in this case, the answer would be C, 2 and 3 only. Question number 7. Which of the following are the conditions qualifying as a Benami transaction as per clause A of section 2(9) of the Benami Transaction Prohibition Amendment Act 2016? You may assume that the situation under consideration does not fall under any of the exemptions provided in said clause. So, according to section 2(9) of the Benami Transaction Prohibition Amendment Act, a transaction or arrangement qualifies as a Benami transaction if it satisfies the following condition. Number 1. A property is transferred to or is held by one person, that is the Benamidar. 2. The consideration for such property has been provided or paid by another person, that is the beneficial owner. 3. The property is held for the immediate or future benefit, direct or indirect, of the person who provided the consideration. So the answer would be C, both I and 2. Question number 8. Which of the following are requisite conditions to issue a show cause under section 24(1) of the Benami Transactions Prohibition Amendment Act 2016? According to section 24(1) of the Act, the following conditions are required for issuing a show cause notice. So 1. The initiating officer should have reason to believe. 2. This belief should be based on material in his possession. 3. The reason for the belief must be recorded in writing. 4. The initiating officer needs to obtain prior approval from the approving authority. So in this case, the answer would be D. Reasons to believe based on material in possession, recording reasons in writing, and taking approval from the approving authority. Question number 9. Which of the following authorities under the Benami Transaction Prohibition Amendment Act 2016 have the power to call for information? So in this case, the answer would be C. The initiating officer, approving authority, and adjudicating authority only. Question number 10. Which of the following is correctly matched as per the provisions of the Benami Transaction Prohibition Amendment Act 2016? 1. Karta holds an immovable property in the name of HUF and the source of acquiring the property has not been offered to tax, not a Benami transaction. So in this case, the Karta holds an immovable property, but whereas the source of the property is not offered to tax. So it would become a Benami transaction. So 1 is false. 2. Property is held by the director of a company for the benefit of the company. That is not a Benami transaction. 3. A company accepts funds routed through shell companies and invests in assets. This is a Benami transaction. So the answer would be C, 2 and 3 only. Question number 11. The agriculture income does not include. So they are asking about which is not considered as an agriculture income. So A. Any rent or revenue derived from land which is situated in India and used for agriculture purpose. This is the agriculture income. B. Any income derived from such land by agriculture. That income would be an agricultural income. Income derived from any building situated on agriculture land and used for dwelling house for the cultivator. This is also an agricultural income. D. Income derived from any building situated on agriculture land given on rent for residential purpose. Rent for residential purpose will not become an agricultural income. So the answer would be D. Income derived from any building situated on agricultural land given on rent for a residential purpose. Question number 12. Any income can be deemed to arise in India when? This is a repeated question, guys. So the answer would be D. The non-resident does not carry out any business directly but through a business connection in India who regularly delivers goods on behalf of the non-resident. Question number 13. Which of the following is not a charitable purpose for the Income Tax Act? So to answer this question correctly, we need to understand what constitutes a charitable purpose under the Income Tax Act 1961. So first one, let's see. Application of the income from the business held under trust for the development of minor ports. Development of minor ports will not be a charitable purpose. B. The application of income from the business held under trust for development of hospitals. Development of hospitals is a charitable purpose. C. Preservation of monuments. It is a charitable purpose. D. Preservation of wildlife. That is also a charitable purpose. So the answer would be A. Application of the income from the business held under trust for the development of minor ports. Question number 14. In computing the total income of a previous year of any person, any income under section 10(12)(b), any payment from the National Pension System Trust to an employee under the pension scheme referred to in section 80 CCD on partial withdrawal made out of his account in accordance with the terms and conditions specified under the Pension Fund Regulatory Act 2013 and the regulations made thereunder, to the extent it does not exceed %% of the amount of contributions made by him shall not be included. So the percentage would be 25% according to section 10(12)(b). So the answer would be B, 25. Question number 15. How is the income exempted under section 10 treated at the time of calculation of total income of the assessee? So they are asking about how the income is treated. Section 10 of the Income Tax Act 1961 deals with incomes which do not form part of total income. This section lists various types of incomes that are fully exempt from tax. When an income is exempted under section 10, it is completely excluded from the computation of total income. It is not just a deduction or an exclusion at a later stage of calculation. The key point to understand is that these exempted incomes are not even considered while calculating the total income of an assessee. They are excluded right at the beginning of the income computation process. So in this case, the answer would be B. It does not form part of the total income. Thank you for watching the video, guys. Stay tuned for the next video.